You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is time once again to break down the wild world of futures options. Yes, it is time for TWIFO. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-compelling network upon which so many of you have been mainlining these days. Of course, if you're listening on demand, all we ask is that you keep rating and reviewing. There are so many new people discovering not just the world of options these days, but of course, the world of futures options. You know, commodities, everything are in the headlines just about every day out there. So more and more people are becoming aware and interested in these markets. So if you like what you hear, keep rating and reviewing. It does help all those new discoverers of these markets find a path to our door. Of course, if you want to go above and beyond, join us for our exclusive shows like Options Oddities every Friday and the Pro Q&A sessions every Tuesday. Got a double dose of those coming up for you next week, as well as our giveaways. And, of course, join us live for this show, everything else we do throughout the week. TheOptionsInsider.com/pro is the place to go to learn more. And let's see who's joining us in the CME and FTSE Russell hot seat today. I'm pleased to be joined once again by Mr. Tim McCourt, the Managing Director and Global Head of Equity Products over there at CME, because that usually means he's got some cool new products in his hot little hands. Mr. Tim, welcome back to TWIFO, sir. It's been, about a month.
Yeah, great to be here. Always looking forward to our conversation and, glad to keep the trend continuing of being on here with new products. That's our thing here on TWIFO.
I got a bit of a bone to pick with you. The last time you were on, I was kind of pressing you about some new crypto stuff, and you were hemming and hawing, and then the next day I see the announcement from CME, and I'll curse you, Tim. Couldn't tell us on the show. So you're being cagey with me. We'll see if I can get some more out of you as we keep on rolling. It is time for the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody. Welcome to the Movers and Shakers, the portion of the show we break down everything lighting it up to the light side, a.k.a. the upside, and to the dark side this week at CME, which is a broad swath of products. You guys can find this report for yourselves if you follow CME. Of course, on Twitter, they tweet it out. We also tweet it out at Options right before showtime, so you can see this report for yourselves every week. Mr. Tim, you know what I'm going to ask you next. Where should we begin our journey this week? To the light side or to the dark side?
Let's go with the dark side today.
Oh, feeling a little dark side in you this week. All right, I can get behind that. So I usually choose dark side myself the few times I get a chance to choose. All right, to the dark side we go, listeners. And number 5 on the dark side this week, our old friend, the Russell 2000, coming in at 6.35% to the dark side. That's quite the week out there. If we expanded the top 5 to a 13, it would have been number 13 to the light side last week, up 1.64%. By the way, obviously, this has been a mostly red week outside of today. Seeing a lot of green on the screen today. So the Reds have it when it comes to this report. It is predominantly, roughly a little over 2/3, looks like, bias to the dark side this week. You can put together about a top 10 if you really want. The green side, that's kind of about it. So a lot of darkness, which means Russell 2000 had to sell off a bit to break into the bottom 5, but it did this week. Number 4, it's silver right ahead of it, just narrowly edging it out off 6.4%. Haven't seen silver in our movers and shakers in quite some time, so that's kind of interesting. Number 3, back to the metals again. It's copper off 6.69%, so a rough week for the metals out here. Number 2, one we talked about recently on the show for the first time in quite some time with Carly Garner last week, it was lean hogs off 6.99%. We talked about them last week because they were number 2 in the other direction, up 11.29%. So wild couple of weeks out there in the livestock markets. And number 1, once again, back to the metals, it's palladium off 10.42%. This one has been rocking and rolling pretty much every week for months now. So I may have to expand my 3 usual suspects of nat gas, Bitcoin, and lumber, maybe to include palladium soon if it keeps that up. By the way, none of our usual suspects in the bottom 5 this week. Bitcoin's actually number 7 off 5.58%. So can't break the bottom 5 this week. All right, to the light side we go. Number 5, it's the peso, the old peso USD. Don't see a lot of FX on our movers and shakers these days, but peso breaking it in on what is otherwise a pretty quiet week to the upside, except for number 1. We'll get there in a second. Peso up 1.97%. Number 4, our old friend Rough Rice up 3.27%. Then number 3, it's RBOB up almost 5.5%, about 5.45%. Number 2, soybean oil. The beans have been moving quite a bit last couple of weeks as well, up 7.78%. But nothing can hold a candle to our number 1 this week, which is heating oil, up 24.3%. Wild week for heating oil. Now, this is one of the rare weeks where, like I said, listeners, we don't see nat gas, we don't see lumber, and we don't see Bitcoin anywhere in our bottom or top 5. So intriguing stuff out there. Mr. Tim, I would ask you where you want to start this week, but I kind of have a feeling where you want to start because you always come with some cool new products. I think this week we're heading to the equities first.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, welcome to the equities. You guys know where to go to find these for yourselves. Go to cmegroup.com/TWIFO, TWIFO. Then go to that asset class, drop down, scroll down to the equities, and then we will begin our journey there. Mr. Tim, one of the reasons, in addition to your scintillating personality, one of the reasons I enjoy having you on the program is because you always come with some cool new products up your sleeves, sir. What do you have in store for us this week?
Yes, today, this week is certainly an exciting time for CME in our equity options offering. This week on Monday, back on the 25th, we launched Tuesday and Thursday options for the E-mini S&P 500. And it was a great day on Monday. When we look at how these products were received by the market, over 79,000 contracts of the Tuesday expiry traded on Monday. establishing a little over 76,000 contracts of open interest, which made the launch of the Tuesday E-mini options for S&P 500 the most successful options launch in CME Group's history, which is phenomenal. We've talked on the show before, Mark, that product launches are exciting, but sometimes launching options market can be a bit of a challenge given just the quoting bandwidth, the technology, everything that goes into quoting all those strikes and all the permutations of puts and calls. It just takes more. But to have this market stand up like it did on day one, have the market embrace it and continue to trade from there, it's been a really great thing to see. And what's interesting is the trend continues. When we look at yesterday's volume for today's, the Thursday expiring options, almost 95,000 Thursday options traded yesterday, and about 19,000 of the Tuesday options traded yesterday. So it's also a very interesting to see as the week kind of advances in time. You're now seeing that investment thesis prove out if people are kind of rolling forward throughout the week. Tuesdays were popular, front half of the week. Thursday is hyper popular yesterday or Wednesday. And now, tomorrow we're going to move into Fridays and then Mondays. So we're really seeing people take advantage of the short dated expiries and off to a great start here for Tuesday and Thursday options at CME.
You certainly picked an interesting week to launch the other days of the week here, Tim. Got some action, it's not like you launched them in the dog days of August and nothing's happening, sir. You picked an intriguing week, sir. Were you excited by that? You think that's going to drive some people in? Were you maybe a little bit nervous? Because as you mentioned, these are new products. Got to make sure all the I's are dotted and T's are crossed, and the equity markets are just melting down before your eyes while you're launching them.
Yeah, it's always a good question because it could either be helpful or hurtful, right? Sometimes when there's so much going on in the market, your liquidity providers are focusing on managing existing risk, not necessarily committing to a new product on day one or mass quoting across the entirety of the vol curve for that given maturity. So it was great to see. Certainly a little bit of market volatility can always get the options markets going. So certainly it was a great backdrop to launch into, where people were reminded of the precision that shorter dated options offer when managing risk. And it gave people a new tool in the toolbox if they wanted to deploy new trading strategies. Maybe they wanted to be a bit more judicious with the theta they were going to pay for their option exposure. We're kind of in the midst of earnings season here in the U.S. So a great time for people to focus on increasing the precision of those option trading strategies, and now using effectively what we have as daily options in the S&P 500 complex here at CME.
Yeah, you're right, because on a day like that, you might think, well, that's great. It's an explosion of volume, a great time to launch a new product. But also, if everyone's in a fast market, things are widening out, the paper is decidedly one-sided, and maybe not the ideal time to put a new product out there. So yeah, it certainly was an interesting one. And you're right, we're there now. We've been talking about this day for quite a while, Tim, ever since the traditional notion of the monthly expiration Friday went away. And we've obviously been past that for a long time. It's kind of quaint now, that notion of once a month expirations. But we've been joking for a while. It seemed like the S&P was going to get there first with pretty much the daily expirations. And now we're there, Tim. If you're an S&P 500 options trader, you have an expiration Monday, Tuesday, Wednesday, Thursday, and Friday. So you have no more excuses. If you have a day of the week you want to trade, Tim, you guys have a product for them. Finally, we are there. Daily options.
No, thank you. Feels great. And it's always good to hear from listeners and customers and market participants out there, because it was clear that the folks thought this would be a useful tool added to the toolbox. They needed it. We did have, and we talked about on the show historically over the years, back a few years ago when we launched Mondays and Wednesdays, we didn't want to rush. We always thought there could be a use case, but it was really the feedback we got from everyone out there that, especially in these type of markets, the shorter time period of being able to exactly pick your day and not overpay for the risk you're managing in terms of either that theta or gamma profile is really something that I think the market is embracing. And when we look back at the last few months, it was a record quarter for equities at CME Group here, where we traded about 7.9 million contracts per day in Q1, which is astounding. Then when we look at some of the other, micro E-mini records, and this is quite the volatile market that we're seeing a lot of risk being managed, a lot of hedging. The backdrop of what's going on is certainly reminding people that it's important to manage risk, and it presents opportunities for people to get involved and deploy new strategies. So it's really been interesting. And I think certainly the culmination of that with people embracing the Tuesdays and Thursdays right out of the gate is a story we're going to continue to see, I think, the next few weeks and months here, as certainly the risk is going to remain in the market.
Well, that certainly seems to be the case. Whether you buy into today's rally or not, we have a great question about that right now, listeners. Get on over there to @options. We're asking you, does this rally have legs, or are you buying in here? Or is this just a dead cat bounce? This only has less than an hour left. This is going to run the length of the show. This is a flash poll, so get in there now. Right now, it's like 72.2% leaning towards the dead cat bounce route, 27.8% saying, yes, this rally has legs. Again, you got a little under an hour to get in there and make your voice heard. But Tim, we talked about, having an expiration every day of the week. And that, besides just being a good soundbite, it opens up some interesting options, pun intended. Back in the past when we had monthly expirations, you could trade between the months, and that was kind of it. Then we added weeklies, and so now you could do weekly calendars. But having daily expirations opens up a lot of interesting strategies that really weren't viable before. You could trade, let's say you want to do a spread before and after the day of a Fed announcement. You could do that now. So I know it's early days. You only have a few days behind us, and it's kind of a bit of an aberrant week. But are you starting to see that kind of paper creep in where people are spreading between the days themselves?
Yeah, I think, it's still a little bit early in that regard, but certainly we've seen a little bit of that in the type of strategies that have been deployed in the Tuesdays and Thursdays. But I think even just anecdotally, the feedback we've gotten during the validation processes that we conduct here at the exchanges, that was exactly one of the use cases where people talk about managing spreads around economic news releases, whether it's the Fed, whether it's earnings, right? We were just talking about earnings seasons a few minutes ago, whether it's corporate actions, right? That might be might be market moving corporate, announcements and whatnot. And if people are taking views on, if we look at some of the news cycle around Netflix earnings, we saw the news around Twitter, right? As these things are percolating in the market, you could be more precise about, how are you trading the market from one day to the next. You don't now have to just pick Monday, Wednesday, or Friday. You can kind of do it Tuesday versus Wednesday, Wednesday versus Thursday. You can kind of work it one day at a time. If you think something might be happening or you're looking for protection or hedging, these are all great things to do. And now, I think what's interesting is we'll see what clients and customers and all the listeners out there come up with. I mean, they certainly always cobble together interesting strategies. So in a few weeks' time, we'll be able to say what's the most popular strategy for Tuesday and Thursday. I'm excited to see what that is.
And I'm sure, Tim, it was no coincidence that you have these live, a week before the Fed announcement, the next Fed announcement, probably a day when people might want to do a little intra-week trading. Was that part of the plan all along, or just a bit of a happy accident?
Perhaps, you might be onto something. Typically, when we're launching products here at CME, I want to make sure we give them as much chance of success as possible. And, introducing options or products before people need them is a tried and tested strategy for success of our product launches here at CME. We definitely wanted to get it out while earnings season was still happening, and certainly before some of the macro policy and the Fed stuff might be creeping into the market later this month.
I often find it's better to give people things before they need them than after. That's usually a better policy. Well, speaking of how people need things, we mentioned some need and some action out there in the Russell 2000 this week. In fact, it's in our dark side at number 5, off 6.35%. So let's sink our teeth in there first. Right now, listeners, you guys go to that same drop down. Go down to equity indices, U.S. index mini, then go down to the Russell 2000. You'll see a pretty active week closing in on 30,000 contracts. Right now, we're at about a 1917 in the Russell 2000 coming into showtime. So that's off about 21, almost 22 points, about 1.12% just this week. Of course, you expand that to last week's show. That's where you get that 6 1/3% move to the dark side. Back below the 2000 level again, which is a psychologically important level. I know a lot of people like to watch out there. It is an equity, so as is usually the case, about 30% of the volume going out tomorrow. Looks like 19.5 calls are all the rage. Those were not small delta a day or two ago, getting pretty small now. Those are pretty active this week. Let's go a little bit farther out so we can sink our teeth into a contract with a little bit more meat on the bone here, listeners. Let's go to the week 3 May contract that has 22 days to go. If you're wondering, the vol out there back over a 30. By the way, talking about vol, I didn't even set the table yet from a vol perspective. Coming into the start of this segment, we had RVX, which is the VIX of the Russell 2000, at about 33 3/4, listeners. That's up 5 1/4 points from where it was this time last week. And if you had checked that earlier this morning, it would have been even higher. We had vol coming in, obviously, a little bit today. VIX cash was at about a 28.5 when we kicked off the show. That puts it up about 6.75 points from where it was this time last week. VVIX, aka the vol of vol, at about 115.5. That puts it up 6.25 points. So vol staying pretty frothy out there. Vol Q, so the at the money vol of the NASDAQ, aka I used to say one of the newest, now one of the many tradable products over there from a vol perspective at CME, 31.25. That's up about 5 points from this time last week. So NASDAQ vol, obviously pretty frothy. That puts that VIX to RVX, so that large cap to small cap vol spread, at about 5.25 points, listeners. That's about 1.5 points tighter. So that has come in quite a bit. And the VIX to vol Q, so that NASDAQ to S&P 500 vol spread, 2.75 points. That's surprisingly tight. That's over 3.5, about 3.65 points tighter than it was this time last week. So both of those spreads coming in quite a bit over the course of this past week. Back out to the Russell 2000 listeners, and you said the RBX is at about a 33, almost 34. But we're seeing similar levels in the week 3 May contract. That vol almost a 31, about 30.75, up about 1/4 point right now. Skew wise, last week the puts were 14.5% bid. This week it's 13.2%. So the puts coming in a little bit. I guess that makes sense as we've gone down the skew curve a little bit. Expect some of those strikes to come in a little bit. The calls last week 11.9% cheap. This week even cheaper, 13.8% cheap. So once again, you guys always ask about the small delta calls in the Russell 2000. If you're interested in them, 2170s in week 3 May were also trading quite a bit this week. They're getting cheaper this week than they were last week, so that may be intriguing for you. Looks like it's all out of the money calls. 2100 calls trading quite a bit in the regular monthly May contract as well. So that's kind of where we see a lot of action. Have to look pretty far to find some puts. It's like 17.5 puts week 2 May going out in about 15 days. Did a little bit of action this week as well, listener. But yeah, it's mostly calls. 19.5s, 2170s, 2100s. We're kind of leading the dance across the board. Mr. Tim, before we roll on out of equities, anything else you want to leave with our audience, sir, on the equities front?
No, I think just what you were reminding me about when you're talking about the Russell 2000 there, a few things for folks to keep in mind is, when we look at the Russell 2000, those options on futures continuing to grow in utilization here at CME. They're up about 35% versus last year, doing almost 9,000 contracts per day. And I just remind people to keep, we're about 2 months out from the Russell Recon. That's going to be here before we know it. It's always a big event for the Russell trading community. So just want to remind everyone to start doing their homework on the Russell Recon. And then same thing with NASDAQ. This is something we've been talking about, though, that index choice matters is the theme here at CME the last few years. And certainly that reigns true with volatility, Mark, as you were just talking about. And NASDAQ options on futures are also up about 40% versus last year. And we did just introduce the Mondays and Wednesdays in both the NASDAQ and Russell. So again, just reminding people that use those short-dated options as best you can. They're a great risk management tool. And as we head into May here, which is hard to believe it's almost already May, we think that this index choice matters theme is going to continue, going to persist, and don't just stick to the S&P. Get out there and get involved in all the indices, and keep everything in mind for the big Russell Recon, which will be here before we know it.
Yeah, it's hard to believe we're already talking about Recon again. It's crazy, But that's where we are in the year. And you know where else we are in the show, listeners? It's that time to break out a segment we don't get to talk about a lot, but I like when Tim joins us because we do. It is time to talk about some crypto.
It's time to explore the volatile world of Bitcoin, Ether, and more. It's time to talk about crypto.
All right, everybody. Welcome to the crypto segment. You guys can find these for yourselves. They have their own section in the TWIFO dropdown, listeners. Go right out back to that asset class and go into cryptocurrencies. You'll see the indexes, the main ones, so the big products. And then you also find the micros in there, which, Mr. Tim, the last time you joined us, a little over a month ago, March 24th, was right to coincide with the launch of said micro Bitcoin and micro ETH options. We've got about a month under our belts now. What are your thoughts on the early days of trading here in these new micro options, sir?
Yeah, I think it's actually just about a month to the day. They launched back on March 28th. Just as a reminder to everyone out there, the micro-sized Bitcoin and Ether options are 1/10 of their respective tokens. These are options on the micro-sized Bitcoin and Ether futures. These are a great tool for those sophisticated active individual traders out there looking for ways to hedge exposures or maybe some of the cryptocurrency that they have in their portfolio, or just looking to deploy individual crypto trading strategies on our options. And it's been a great first four or so weeks. We've traded over 40,000 contracts. OI has been averaging about 28 to 30,000 in the micro crypto options. We're seeing both Bitcoin and Ether trade, which is great. The one thing that to note is interestingly, micro Ether options is doing a little bit better than Bitcoin, but I think that kind of harks back to, I think, Mark, a theme that you and I have talked about before, that the crowd out there, I think, likes to trade Ether a little bit more than Bitcoin. So with some of the volatility going on, Ether seems to maybe be doing a little bit more volume than Bitcoin. I think we're seeing that in the option space, where micro Ether is doing over 5,000 contracts per day, just about. So it's been great. We're really doing all we can to make sure we're listening with customers, listening to the market. Micro-sized crypto options are another example out there. But we got ways to go. We got more we're doing to try and grow these products and encourage people to check them out, but also a great start.
You answered one of my questions. I was kind of wondering if the micro ETH was going to resonate a little bit more with people out there, just from our own audience and listening to the people on our crypto rundown show. It does seem like there is a strong contingent out there. Bitcoin makes all the headlines, but in the crypto space, there are a lot of folks who are knee deep in the ETH world. So I was kind of wondering if ETH was going to take the volume crown. And it sounds like, Tim, that is the case. The folks are trading it up over there on micro ETH even more than the Bitcoin right now, sir.
Yeah, so certainly we've seen early days that tends to be the trend, but I wouldn't count Bitcoin out just yet. People love to trade Bitcoin. I think even though Bitcoin, I would say plus or minus, probably a little bit range bound these days, which is probably maybe taking some of the fun out there for some folks who are looking to trade it. But yeah, I think what we've seen historically is that some action or price action in Bitcoin, we're certainly going to see people hedging with options, hedging with micro futures. But yeah, so I don't know if Ether's got it forever, but early days they've taken the pole position against their micro crypto option siblings for Bitcoin.
You heard it here first from Tim McCourt. CME has officially declared micro ETH the winner. Don't bother with the Bitcoin; it's all about the ETH. Well, speaking of other products and other altcoin, Tim, I was giving you a hard time on the last show. I was like, "Come on, give us something." And no sooner did we pretty much turn off the machines last time, Tim, and then the news breaks that you guys over there at CME adding 11 new cryptocurrency reference rates and real-time indices. In fact, looks like they went out this week, April 25th. So you were holding out on me, Mr. Tim. You could have given us at least one, sir, just to tease us with one. It's like, it's just you and me chatting. There's nobody else, right? Just two guys talking. And you left me high and dry, sir.
That's right. I have to apologize, but corporate communications does a good job of keeping the reins on. And
they're not listening. It's just me and you talking. Just two guys chatting.
Yeah, and no, it's great. I mean, we're very excited. We've launched 11 new cryptocurrency benchmarks here at CME with our partner, CF Benchmarks, and it's 11 reference rates, which are the once-a-day fixing, as well as the real-time indices that tick second by second. So it's something that when we look at this, we're excited about. We launched the New York reference rate version of Bitcoin and Ether back in February, and this week we started publishing 11 new rates. And just to kind of give people some color out there, the 11 rates that we publish, they're non-tradable products. They're reference rates. They're regulated under the EU BMR regime. Crypto Facilities is the administrator, CF Benchmarks. But they really are speaking to the 11 that we picked. So now that we've added them to the Bitcoin and Ether family of reference rates, this really now gives us about 90% of the market cap of those cryptocurrencies that are really tradable. So, taking out the stable coins, the kind of meme coins and tokens that exist out there, this really represents 90% of those tokens that are tradable, that have an underlying protocol with some sort of utility. And when we look at adding the likes of Algorand, Cardano, Chainlink, Cosmos, Polkadot, Polygon, Solana, right, even Uniswap, as well as Stellar and Bitcoin Cash and Litecoin, We're focusing on those that are either first generation coins like Litecoin and Bitcoin Cash, or those proving the scalability or efficiency of the existing Bitcoin or Ether networks or protocols that are out there. This is where we're seeing a lot of demand from the marketplace, even for that once a day fixing rate, that once a day reference rate, because as the market is trading more of these in the spot market, they're entering into whether they're commercial transactions or whether they're doing projects on the associated networks or protocols. Everyone kind of needs a once-a-day reference rate to point to. And that was exactly what we were hearing back in 2015 when we introduced the Bitcoin reference rate, or 2018 when we introduced the Ether reference rate. So it's really great to work with our partners in the marketplace to get these 11 new rates out there. People can go and certainly check them out at cmegroup.com. We have all the information on a little widget there that people can check out. And it's something that we just encourage people to do. If you want to go right to the page, it should be cmegroup.com/crypto benchmarks, and just check out the information.
Yeah, I'm looking here. You guys went pretty deep. You didn't just pull, your standard top 10 market cap coins and that was it. You guys went pretty deep. So I'll give it to you for the full list here, listeners. So Algo, that's not a top 10 coin there. Cosmos, so Atom. Solana, obviously that one's top 10 these days. We see that around quite a bit. Bitcoin Cash, another interesting one. We don't always see that in the top 10 out there, but an active one nonetheless. Litecoin, another frequent offender out there. Stellar, Cardano, another one I know a lot of you like and sink your teeth into and talk about on our Crypto Rundown program. Polkadot, it's in and out of the top 10 a lot these days. I think it's out of it right now. XLM, another one we don't see that often in the top 10 out there. Chainlink, again, that one, we see it popping up every now and then. Again, kind of it flirts with the top 10 every now and then. Polygon and Uniswap. So a pretty deep bench of reference rates, listeners. So if you're intrigued, again, I was teasing Tim, giving him a hard time on the last show that when we're going to see some more altcoin, here you go. These are, again, not tradable. These are just the reference rates, but we all know that's the beginning of the process. If you want to have a tradable product, you got to start with a reference rate. So yeah, these are some pretty interesting choices, Tim. I'm going to sink my teeth into these quite a bit. And I'm looking forward to, I don't think it'll be your next appearance, but I'm looking forward to sometime in the future, Tim, when you join me here on the show, you're going to come armed with some hot new futures on at least some of these, sir.
Yeah, we'll see what happens. We're certainly going to be listening to customers. Right now we're focused on getting the reference rates up and running and establishing that data set. We're also working in the marketplace where, folks outside the U.S. in particular have always look at these for structured products, ETFs, ETNs. So we're happy to have these reference rates out there, and there's certainly a lot of utility to them right now. We'll be working with everyone to figure out where should we be looking for additional product development. And then the one other thing I'll say on the reference rates, I'd be remiss if I didn't take this opportunity. We're adding our 6th constituent exchange to our cryptocurrency reference rate family. We're starting next week on May 3rd. LMAX Digital will join the likes of Bitstamp, Coinbase, Gemini, Ipit, and Kraken as one of our constituent exchanges. Now, not all 6 exchanges are supporting all of the reference rates, so also go to our website and you can kind of see a nice little graphic of which exchanges are support contributing transactions to which reference rates. But it's also excited to have our 6th constituent exchange join us next week.
And you mentioned that reference rate methodology. We haven't talked about that in a little while. Those are obviously your way to kind of take a broad cross-section of a variety of different venues. Maybe really quick for some of our new listeners, Tim, break down why you guys decide to go with this approach of the reference rate versus what they're typically used to. They look for corn, they just go to the corn market at CME or copper, whatever it may be. But for the crypto, you take more of a reference approach.
Yeah, it's a great question. So just as a reminder, the once-a-day CME CF reference rate for cryptocurrency are published at 4 p.m. London time, and the calculation window runs for an hour, 3 p.m. to 4 p.m. London time, and that 1 hour is partitioned into 12 equally weighted 5-minute windows. In each 5-minute window, we take the token or coin versus fiat dollar, so it's those spot transactions only against fiat dollar, not against a stable coin or USDC. It's against cold hard US dollar cash. And we then take the volume weighted median for that 5-minute window. And then we straight line average those 12 5-minute samples to come up with the reference rate. And what that does is that it gives us a broader representation of where the underlying spot market is establishing a price, and we have certain obligations in terms of it being a regulated benchmark and us having regulated futures on Bitcoin and Ether, that the underlying reference rate must be resistant to manipulation. So that methodology of taking a sample across the 12 5-minute windows using median versus mean, this is really just designed to give robustness and efficacy to that reference rate. My background, even before being at CME, I was an equity index trader, so I always have a little bit of a sweet spot for indexing and reference rates. But it really also then gives the market the opportunity for a convergence. Our futures products based on Bitcoin and Ether, it settles against the reference rate, which is based on spot market transactions, and it helps keep that interrelatedness between the futures market and the spot market in check, in a way for market participants to potentially move between the various underlying spot liquidity pools and the futures market. And then the 6 exchanges that we now have in our CME CF reference rate family, they have to meet strict inclusion criteria with respect to the percentage of that spot market they are representative of. They have to meet certain requirements with respect to KYC and AML. There's kind of a litany of technical standards they must meet. So there's also kind of some really rigor around being included in this reference rate that really give a high degree of trust and transparency to what the once-a-day value of that underlying token or coin is. And same thing with the real-time index, similar methodology, but calculated on a second-by-second basis. So tremendous amount of thought and rigor has gone into these reference rates, and the market has really embraced it for Bitcoin and Ether. And we really feel these are some of the preeminent cryptocurrency regulated benchmarks out there, and really looking forward to see how people use the next 11 that we launched this week.
I'm looking forward to it as well. Now, Tim, get a little bit of a break. You get to rest your voice, have a beverage. While looking at the dark side here, we saw a lot of movement to the dark side in the metals, so we're going to hang out there next.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, everybody, welcome to the metals. Like we said at the top of the show, a lot of dark side movement in the metals this week. Number one to the dark side was palladium, off nearly 10.5%. You know, if you've been listening to the show for a while, not a lot of options action in palladium. Then we've got 3 and 4 with copper off 6.69% and silver off 6.4%. And it does show how much evolution we've seen in the copper options market. When we first started doing this show, or even the previous iteration of it, the long and short of futures options, copper options were kind of an afterthought. A few thousand contracts here or there, that was about it. They're closing in on 20,000, which means it's pretty much neck and neck with silver right now, which is kind of interesting. Silver still leading the dance out there, but only by a couple of thousand contracts, which again shows you how much evolution we've seen in the copper market. But we know a lot of you like to hang your hats in silver. I know Uncle Mike has been on the show many times, a big silver aficionado as well. So we're going to hang our hat out there this week. Go to that drop down, listeners. Get out of the equities, get out of the cryptocurrency, go down all the way to the bottom to metals, then go to the precious metals, then slide one down to silver. That's where we're hanging our hat this week. 23 and about a quarter is where silver was coming into the start of this segment, off 4.4% just this week. Obviously 6.4% if we go all the way back to last week's show. In terms of action, like I said, about 21,000 contracts on the tape. So a decently active metal, but it's no euro dollars, obviously. And in terms of where the action was, it was June with about 46% of that paper. June has about 27 days to go. If you're wondering, what is the vol out there these days in silver? It's at about a 27. That's up 1.5 points. So that's nothing to sneeze at. It's hanging out right around where VIX is, a little bit shy of where the small caps and Russell 2000 are. So that's a decently volatile metal out there. In terms of skew, we had a pretty decent evolution in the skew this week as well. Last week, the puts were unched. They had no bid or discount to the at the money at all. This week, they're a 3.5 point discount. So the puts have come in quite a bit. The calls last week, 3.1% bid. This week, leaping up to 6.6%. So quite the evolution. Puts getting crushed, calls getting bid up. Again, we're moving down. So that is kind of what you would expect out there from that skew curve to rotate around the at the money. But still, that's an aggressive move, particularly on the calls. In terms of the action, I said we're at about a 23 and a quarter, and it's the 25 calls that were leading the dance. Actually, I take it back. No, just barely shouldering them aside. The D's 40s, 40s. Got about 1,400 of those going up this week. So silver looking a little bit reminiscent of gold right now in that they like their funky out-of-the-money call action. These 40s have been trading all week. 700 on Monday, 400 Tuesday. Yesterday, traded a couple hundred, trading again today. So a total of about 1,400 all week long. Half of them on Monday. All of that was opening all week long as well. Looks like about 700 of the 50s have traded again all week long, a little bit every day, but not enough to be. Well, today looks like it might be a vertical because it's the same number of 40s and 50s that trade. So it's like some 40, 50 verticals have gone up as well. But yeah, weird upside paper also happening in silver now, not just in gold. Looks like some 40s outright as well as some 40, 50 verticals. Again, it's about 1/2. Looks like the volume of the 40s versus the 50s. So that's interesting. They'll go back to the 25s in June. That also pretty active this week with about 1,200 contracts. The big day yesterday, so almost 1,000 of them. So almost a whole week's action going up yesterday. All of that opening, a couple hundred today. The rest, the pittance scattered throughout the rest of the week. So a lot of opening action on the 25s this week as well. And given the fact that we're seeing that call skew leap up quite a bit there in June, you got to wonder if some folks weren't opening buyers on those 25 calls. Again, we're at about 23.25. What are your thoughts? June 25 calls. You think silver can get there by June expiration? Looks like somebody does, listeners, and they're willing to put some money where their mouth is out there. Tell you what, since I mentioned it, let's also take a quick dip over there into copper. We're gonna swing over to the base metals now, listeners. So drop out of the precious, go down a couple of slots to the base metals. Then we're going to click on copper. It has a little over 19,000 contracts on the tape right now, listeners. So not the quietest week, but a pretty decent week out here in terms of copper options. Of course, if I can get my system to play ball, we're hanging out a little bit slow out here today. But of course, 19,000 contracts on the tape for copper, listeners. As we keep looking, there we go. All right, thank you. Better late than never. 19,100 to be precise contracts on the tape in copper this week, listeners. And if you're wondering, copper right now at about a 4.44, so a 4.44 out there, off about 15 cents or about 3.4% just this week. Obviously, if you go back to last week, it's off nearly 7%, 6.7% or so. And of that paper, again, almost 20,000 contracts on the tape this week, about half of it, 53% coming in that June contract. Has about 27 days to go. So copper, not just volume-wise looking similar to silver, but vol-wise. That June vol is at about 26.5. Remember we said the June vol in silver is at about a 27. So very similar there. It's up about 0.75 of a point this week. So decent volatility to be found in both of these metals and similar volume levels. That is interesting. Not so much on the skew side this week, though. The puts were 1.7% bid last week, about 1.1% bid this week. So not a lot of action there. The calls, 1.3% bid last week. Catching a little bit of a lift this week up to 3.3% bid this week. And in terms of action, I said we're at the 4.44 level. It's the 430 puts, 4.3 puts leading the dance this week with 1,300 contracts on the tape. Seems like most of that actually today, 700 of that 1,300 going up today, almost 500 on Monday, opening throughout the week. Obviously, we don't know about today's paper, but it does seem like some folks getting a little bit interested here in some of these 430s, maybe writing some slightly out of the money puts in June here. That is interesting. And follow right behind it. Actually, you know what? I missed another longer term one here. So going out to September, the 5.5 calls are actually winning the race this week with 2,200 contracts, 1,000 today, 1,000 yesterday, and the rest kind of scattered throughout the week. Most of that opening yesterday. So opening paper on the 5.5s. Interesting. Looks like 545s also traded a couple of hundred times this week, yesterday, and a couple of hundred times today. So could be 1/4, 225 by 1,000, 445, 5.5. That's a very tight spread if that was the case. That is weird if related paper out there, but the 5.5s trading 2,200 times. So forget what I was talking about earlier with the 430 puts, listeners. The 5.5s are pretty active in September. And if that's not rich enough for your blood, the July 6s also trading 1,000 times, all that today. So looks like the 5s, 5.5s, and 6s all traded pretty actively today as well in July. 1,000 of the 6s, 630 of the 5s, 562 of the 5.5s, and just for fun, 250 of the 480s as well. So Bit of a funky ladder or strip there. Either way, upside. We talked about upside in silver. It seems like some folks are pretty active in the upside as well here when it comes to upside in metal. Speaking of active, you folks are always active with your questions. Let's get to some of those right now.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, Mr. Tim, I hope you enjoyed your break because we got a product request for you now coming from a listener. This was Wolfgang Amadeus. So apparently Mozart writing in with a product request for you, Tim. He says, hi, please add futures options to the Micro Russell 2000 or tell me the date when it will arrive. Also, if you can make Micro Nikkei 225 and Micro S&P Midcap 400 futures, please. Yes, volume is lower, but micros will allow more access, increasing volume overall. Please add it! Exclamation point. So there you go, Tim. He's very polite, but he wants some new products. What do you say? He wants micro options on the Russell 2000, as well as Micro Nikkei and S&P Midcap 400, sir.
Yeah, I think all great suggestions. You know, we're just talking about when we look at micro options. Right now, we are still kind of focusing on the S&P and NASDAQ. We're still working on building those markets. Going pretty well, right? You know, we're seeing good markets across the trading system, you know, all day and all night. We launched those a little while ago, and, you know, we're doing okay. The micros are doing about 40,000 in the the micro E-mini S&P, about 8,000 in the micro NASDAQ. So we're going to start to look to expand out, but, you know, it's a balancing act where we want to make sure the ones we have out there take root, and we kind of get those in a good place before we start looking at possibly the Russell or the Dow. But he's not alone. Certainly heard a lot of requests for micro Russell and micro Dow, especially when we're talking to or looking at some of the overseas market. We know the Dow is always a popular trade, particularly out of the Asia region. And yeah, when we look at other micro-sized contracts, all great suggestions. We've certainly had a tremendous amount of success with micro products at CME. When we now have just under 24 micro-sized products that have traded over 1.4 billion contracts since they were all first introduced. And then when we look at the ADV for micros in Q1, 3.7 million contracts, micro contracts trading at CME. So it's great. You know, we got lots of things on the horizon. Certainly something we're going to be continuing to work with the marketplace to make sense. And certainly stay tuned for what other indices we might add to the micro family here at CME.
Tim, you got to be excited. Amadeus coming back from the grave. And he doesn't want to make a new symphony. He just wants micro options from CME, sir.
Sounds good.
All right, let's keep with the equity theme right now, listeners. We have this question of the week right now. It's got about a day or so left in it, listeners. We're asking you right now, when we posted this at the beginning of the week, we said, you know, we're back in the red in most of the major equity indices. So how are you positioning in your broad market S&P 500 type portfolio right now? I'll give you four choices. So you're still long your S&P, could be SPY, could be SPX, could be whatever, E-mini, whatever flavor you want. You're still long that. Or you're long that, but with a put or some other type of hedge in place. Or you're in cash, maybe waiting to buy a dip or two out there. Or you're saying the heck with it, and you're moving to crypto. Mr. Tim, if you had to guess, which of these do you think our audience is choosing right now, sir?
I don't know, Mark. I mean, it's a tough one.
I will say, I'll give you a hint. There's no clear leader. It's all very neck and neck.
Crypto?
Oh, wow.
Like crypto always wins out.
You are the crypto man. I will say that's the one surprise I have in this. I misled you because crypto is the one thing that's not getting any love. Crypto only 3.3%. It's very tight amongst everything else, though. You know? No love for crypto. I was stunned by that.
Yeah. Wow. There you go.
So, right now.
Keep the surprises coming here.
Right now, in cash, waiting to buy a dip is just slightly winning with 35%, followed by exactly a third, 33.3% of you saying you're still long your S&P 500 positions. Could be in any flavor, E-mini, SPY, SPX, whatever you're trading out there. 28.3% of you saying you're long the S, but with a put or some other hedge in place in case the worst should come to pass. And again, bringing up the rear, only 3.3%, Tim, saying they're in or moving to crypto. Maybe some of those reference rates will gin that number up a little bit. We got to get more crypto, folks. That's a terrible showing, sir.
We got to work on that.
I firmly blame you for that, sir. So right now, you got about a day or so left. If you're going to crypto, maybe you're going to some of those we were just talking about, your Solanas and everything else, and you're saying the heck with this S&P, hit us up. Let us know. By the way, we have that flash poll going right now. It's going to end pretty much the end of the show. So podcast listeners, on-demand folks, you're pretty much out of luck unless you're voting right now. Go to Add Options to make your voice heard. That's a good reason why you should be hanging out on our Twitter throughout the day, listeners, because we have a flash poll right now. Does this rally we're seeing today in the indices, does it have legs? Are you buying this, or is it just a dead cat bounce? That one's pretty easy. 75% of you saying this is the dead cat bounce. Only 25% saying this rally has legs. You got pretty much till the end of the show to make your voice heard. Let's go out to this. We got time for one more here. Let's go to PJ Maxx. PJ Maxx says, hello. Well, hello, PJ. Because I wanted to say I'm very much enjoying the program. I'm a crypto fan and disappointed there's not enough Bitcoin options activity at CME to discuss every week on the program. Well, that's true. We try. Sometimes on the big options in particular, there's not a lot left. We're still waiting for the micros to start percolating through all the quick strike system. Then we'll have a little bit more data to sink our teeth into there. He goes on to say, but I'd like to know the host's thoughts on the ProShares BITO ETF. This seems like a good introductory step for many of the listeners who may want to trade the CME Bitcoin futures, but only have equity accounts. It also has a fairly robust options market for options traders. Do you agree? Yeah, this is an interesting product. We have talked about it quite a bit. It is, if you're looking to trade crypto in a securities account, it's one of your few games in town right now. You got this and pretty much the Grayscale. There's others that have come out since BITO, but BITO has kind of sucked up all the oxygen in the room. It really does all the volume. And on the options front, there's no options on the Grayscale, so BITO is really the only game in town. And it's doing decent options volume, about 60,000 contracts a day. I know, Tim, when you joined us back towards the end of last year, when the BITO product first launched, there was all this consternation that BITO was going to blow out the CME futures and hit position limits, and also that the roll yield was really going to wipe out this product. It seems like we're close to 6 months in now. It seems like a lot of those concerns have mitigated, and people are kind of just trading it up. Is that your takeaway as well, sir?
Yeah, a few months in since that debuted in October and continues to do well in the market using CME Bitcoin futures to underlie that ETF. And I think always good questions from people about position limits and the financing spread around the rolls. But it's kind of worked as designed, right? A few months in and no issues on the position limit side. It's something that the exchange watches, and we work with market participants to make sure they have everything they need to operate their product and hedge their risk. We'll have to, I think the roll cost and the financing is obviously something we're always paying attention to. Market loves to chat about it. But I think it's always important to remind people out there is that the futures prices is a futures price. You're not necessarily indifferent between trading the future and trading spot. So when you're looking out the curve and you see some of that roll cost or that the richness or cheapness priced in to the future, it's of the carry cost, the yield you should be extracting from the underlying digital asset, as well as insurance costs, trading costs. It's an all-in price for where it should be in the future. And I think it's just important to people to remind it's not the same as spot. But that works okay because, ProShares have been able to package it up and put it into the BITO ETF. And it's been, I think, the most successful ETF launch ever in the U.S. with respect to, I think, hitting the $1 billion mark in 2 days when it came out in October. So it's doing great, and we're happy to work with those guys to continue to make sure they have everything they need as they look to serve the market through their retail offering. It's been great success story.
Yeah, it has been kind of surprising. We actually just talked about this, PJ, on our Advisors Option show earlier this week. So I'm going to pull some of the data we crunched from that for you. But when it first launched in October of last year, everyone and their mother were wringing their hands, not just about the position limits, but also about the roll yield. There were estimates of 13 to 20% a year. This thing was going to have headwinds in terms of negative roll yield. For all the reasons we've discussed many times, all these products that use the futures have to roll down the curve. If you have a traditional contango, that could come back to bite you. What we've seen is a couple of surprising things, though. First off, the contango on the Bitcoin futures is nowhere near as steep as you would see in a lot of other products out there, whether it's a crude oil or volatility, whatever the case may be. For a lot of reasons we talked about, earlier this week, there's that basis trade between the spot and the futures. You could buy the spot on any venue, sell the futures, and it kind of crushes down a lot of that contango. So the slope isn't as steep, which is usually would come back to bite you as you're buying let's say a 2-month out future and then selling it when it expires in that front month. As you're rolling down that futures curve, the slope is not as steep, and that has translated into pretty decent tracking. We ran the numbers again earlier this week, and depending on your frame of reference from launch to the end of March or from launch to the end of last week, BITO did a pretty good job tracking Bitcoin. It was only off about 1 to 1.5%, maybe 2%, depending on your frame of reference, which again, you're talking almost 6 months. We were talking 13 to maybe 20% people were expecting. So that's done a much better job of tracking Bitcoin than I think a lot of people expected. And the negative roll yield has been nowhere near as pronounced as people thought. And we had the ProShares folks on a couple of weeks after the ETF launched, and they came out and said they didn't think those initial numbers people were talking, they thought it was going to be a lot less than that. And that has turned out to be the case. So if you're intrigued by this, PJ and everyone else, and for whatever reason, maybe you don't want to dip your toes into the futures yet, but you want a way to trade those and trade options on them, certainly, you could do worse than trading BITO. It is a far better product in terms of tracking and impact of roll yield than a lot of people assumed when it first launched last year. So a great question, PJ. We'll keep watching this, and it should be an interesting one to talk about in the future. All right, that music means you have survived another episode, Mr. Tim. But before you go, I will give you one last chance. If there's any hints, any teases you want to leave our audience with in terms of cool new products from CME coming down the pikes, I don't see a release, maybe let's say tomorrow, about 15 cool new things that you're launching. If you want to get ahead of that now, sir, now is the time. The floor is yours.
Oh yeah, no, I don't want to ruin the fun, Mark. So I got nothing else to break here today. But look forward to coming back, and always enjoy being on the show. And just remind all the listeners out there to want to check out anything else we've talked about today or covered. Just go to cmegroup.com. It's always a great resource for all things at the exchange. And just really encourage everyone to get out there, do your homework, and keep those great questions coming. Love the questions from the crowd today, and really looking forward to see how some of these things grow that we covered in today's show, Mark.
Yes, head on over to CME Group. While you're there, cmegroup.com/TWIFO is the place you can go to get all the reports we talked about today and just about every other product under the sun over there at CME. So if there's something we didn't talk about today you want to analyze for yourself, cmegroup.com/TWIFO. Those are active all week long, so you don't have to worry about going at 2 a.m. as all the reports aren't on. They're always there, ready and waiting for you. And of course, you know where to go to learn more about all things small cap. Tim mentioned the Russell Recon, not that far away, right around the corner, listeners. And that's a pretty impactful event. You want to learn more about that, the impact of COVID. They have the whole COVID Impact Center, the impact on small caps, all the other stuff going on over there, volatility, everything else. FTSERussell.com, FTSERussell.com is the place to go. Give them a follow on the old Twitter as well, at FTSE Russell, all one word. We have to get on out of here for today. Listen, that's going to conclude our broadcast day. Don't worry, we're back again tomorrow, noon Central, 1 p.m. Eastern for Volatility Views. And for all you Secret Club kids, coming back 2 p.m. Central, 3 p.m. Eastern for Options Oddities. Going to break down the exciting week that was in terms of unusual options activity. So we'll see you there. And then, of course, back again next week, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, Visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.